Welcome to the Luca Ledger.
Welcome back to the Luca Ledger with Brett C. Arnold, CPA and president of Luca Financial. Brett works with entrepreneurs and small business owners to help them understand their numbers, reduce unnecessary tax burdens, improve cash flow, and build more profitable businesses through strategic financial planning and fractional CFO guidance. I'm Evan Mack, and today we're talking about when a small business should hire a fractional CFO and when it's too early. Brett, my man, welcome back.
Hey, thanks, Evan. I appreciate it. I think today's topic will be hopefully pretty eye-opening for business owners as they continue to grow. So I'm excited to get into it.
So kind of let's start with the basics. What is actually a fractional CFO? How is it that role different from a bookkeeper, accountant, or a CPA?
Yeah, the analogy I like to use whenever I'm meeting with new prospects and explaining how a fractional CFO works is it's kind of like the difference between an at-home weight scale and a personal trainer at the gym. On the weight scale, you can read the numbers and you typically understand a little bit about what that number says, but you might not know what you need to do or change in order to achieve your goals. And that's kind of where the personal trainer comes into play and says, hey, based on my experience and my knowledge and working with people like you, here's things that would really benefit you and help you get to that next level. Same thing on the fractional CFO side. We can not only read the data, but interpret the data. And then based on our education and our experience and our work with other clients, give you the prospect or you the client some really good information to help you make decisions to achieve the goals that you've set out for yourself.
Many business owners are generating this revenue, but still feel they don't truly, understand where their money is going. Is that lack of financial visibility one of the first signs that it might be time to consider that fractional CFO?
Absolutely. So on one of our previous episodes, we talked a little bit about cash flow and understanding the difference between revenue and cash flow. And that is very important here. Revenue is not cash flow. So these are oftentimes where we're hearing clients say things like, I'm making money, but I don't know where it is, or my top line revenue is growing, but my profit isn't following that number. And that's where a fractional CFO can help in and step in and answer those questions for you. So that way you're understanding not only I'm making money, but where is it going and how can I keep more of it?
Is there a specific revenue level, business size, or maybe stage of growth when hiring a fractional CFO typically starts to make sense? Or is it just about the complexity of the business?
Yeah, so this is a really big question. There's not necessarily just a revenue trigger that says, hey, once you hit $1 million in top line revenue, you need a fractional CFO. It's more about the complexity of your business. So we might have a client who's doing $800,000 in top line revenue, but maybe they've got multiple employees or they're dealing with inventory or they've got a lot of aged receivables or aged payables. So the complexity of that type of a business would warrant a fractional CFO versus I could have a client come in and they're doing $5 million a year in top line revenue, but it's very steady. It's the same amount every month. They've got a handful of expenses. And in that case, a fractional CFO may not be as valuable. So really what we want to look at is the complexity of a client's business to determine, hey, are there a lot of moving parts where a fractional CFO can come in and help you interpret, organize and interpret all of this data versus if maybe it's too simple and we're not quite there yet.
What are some of the biggest warning signs that a business owner has waited too long to bring in this financial leadership? Are there problems that become much harder to fix when they're ignored?
Cash flow is always a big problem that we see. So a lot of times when we have new prospective clients coming in to our book to work with us, cash flow is a concern, and they may have kind of started down that nasty hole of taking on hard money loans. If you're unfamiliar, a hard money loan, you're going to pay interest of 45%. So they're insane loans, but sometimes business owners take out those loans because there's no other options. And once you kind of get into that mess, it's really hard to dig your way out of it. So that's certainly one thing. Or if you feel like you're always stressed about payroll coming up, and hey, that's typically a business owner's largest expense. And that's always a stressor. That's a sign that maybe I should have engaged a CFO sooner rather than later. Or I'm seeing my other sources of debt grow, or the margins that I've set out for myself are not actually what's happening, or I don't know anything about my business, and I feel like I need to understand what these numbers are telling me. So there are certainly times where we'll start dealing with new prospects and realize, hey, I wish you would have called me 6 months ago. so we can get engaged before maybe some of this mess has happened. So anytime a business owner starts to feel that anxiety, a lot of times it's, hey, I should reach out to somebody that does this for a living, for sure.
On the other hand, though, how can a business owner, recognize that it's simply, too early for a fractional CFO? What financial foundation should a company have in place before even making that kind of investment?
So I answered the question earlier about when a fractional CFO is needed. Is there like a trigger? So like I said, there's not really a trigger. A lot of times we'll see clients in the $1 to $3 million top line revenue number is around where we start to say, hey, let's start looking at the CFO piece. However, it could be too early if, and we've had this happen before where we engage with a client, they want us to be their CFO, they think their books are clean, and then we get into their financials and realize this is a mess. And a CFO, what we report is only as good as the data that's behind it. So if we start to get into the numbers and realize that maybe bank accounts haven't been reconciled for several months, or accounts receivable and accounts payable hasn't been cleaned up, maybe it's not aged, but it just hasn't been cleaned up on the financials. So whenever we see those things happen is when we're as fractional CFOs step in and say, hey, we really actually need to pause the CFO side of this engagement because it doesn't make sense for us to pivot to this more forward-looking advisory type work until we know that the data behind what we're going to be reporting is actually good data that we can use. I had a really great call with a client last week, and it was their quarterly CFO meeting where we started presenting things. And I brought up a new way to look at their data. So it's a specific type of company, and they're looking to exit the market in a few years, and they understand how they need to increase their multiple for whenever they do want to exit to get the biggest bang, the biggest buyout. And one of the big important things for them is recurring revenue. So we kind of broke down and I showed them, hey, of your revenue, 55% of it is recurring and 25% of it is kind of like advisory type work. And then the rest of it is like one-time sales. Really good view. But then the business owner was like, hey, I love this metric, but I don't have a lot of confidence that the numbers that are being booked by our internal accounting team, so this isn't something that our firm handled, but something that the business handled themselves. I don't have a lot of confidence that those are being categorized correctly. So you say 55% of my revenue is from recurring revenue. I think it's actually more like 70%, but I don't think things are being booked correctly. Perfect example of I want to give you really great data as a CFO, but if the underlying work isn't being done correctly, then it really there's no point.
So what does a fractional CFO actually do during maybe like a typical month? What kinds of financial insights or strategic decisions can they help business owner, with that may not be getting from their existing accountant?
Yeah, we get this question a lot. Why do I need to pay for a CFO? What do you do? So really think of it in terms of a bookkeeper and accountant is someone who's going to keep data organized and keep what has happened in order and be able to present that to you. That's great as a business owner to know if it's the month of July, I want to know what happened in June. That's helpful. Whenever you bring on a CFO or a fractional CFO, they're going to help you more forward looking. Here's what's happened through June, and here's what we're expecting to happen through the end of the year based on trends of data that we've seen for the first half of the year and maybe your goals and expectations for the last half of the year. So that's kind of a pivotal difference between a bookkeeper and a fractional CFO. So during the month, we're looking out for things like, are we meeting our goal for this month? And are we on target to meet the goals for next month? We've talked about this certain cash position and we don't want to dip below it. I'm going to check in and see what that looks like throughout the month. And then we're also looking for debt and investment advice as well. So not as a fiduciary, but as an accountant to say, hey, we want to stick within these ratios. If you're wanting to make these decisions, they fall outside that prior guidance that we've decided is going to be best for you and your business. So those higher level decisions are things that come to a fractional CFO versus if I, as a business owner, we're going to go ask my bookkeeper, hey, I'm thinking about getting this small business loan, or I'm thinking about hiring this new employee. That's not data that or that's not an answer they're really going to be able to answer based on categorizing transactions. They really need to know what are the goals and ambitions of the business owner and where are we expecting things to go. So that's where we can zoom in and answer those types of questions throughout the month.
One of the biggest concerns for growing businesses is hiring maybe too quickly. expanding too aggressively, investing in the wrong areas. How can a fractional CFO help an owner determine when these numbers actually support the next stage of growth?
Yeah, so the biggest thing there is we're looking at what has happened and what are the goals. What do we want to happen for the next 6 months? And then do these decisions that you're wanting to make align with those goals? So I feel it as a business owner as well. A lot of times you feel the pressure and anxiety of the business moving along. So you might feel busy, you might feel overwhelmed, underwater. I feel like I don't have any capacity, I can't keep up, and you'll make decisions irrationally based on those feelings. But what we want to do is help the business owner get up out of the details and take a high level view of what has happened and what you're wanting to happen, and then say, based on the numerical data, based on these numbers, does this decision that you want to make fit within your goals? And that might not necessarily give you the right answer, or the answer that you want to hear, but what it does is it couples a data-driven answer with maybe the feelings that you're having, and then you can find somewhere in between to say, okay, maybe I just need to figure out a temporary solution for hiring because I feel like I'm in a crunch right now, rather than taking on the burden of another full-time salary. Or that helps you as a business owner to say, hey, based on the numbers, the data that I have, the people that I have should be able to handle the work that we have. So there's something happening here, and I need to dig into it and have a conversation about it, because we just don't want business owners making decisions, being reactive on decision making, based on like their feelings or anxieties that they may be having.
What should a business owner look for when deciding whether to hire this fractional CFO? Are there specific questions they should ask to determine whether the person is truly strategic or simply providing another version of an accounting service?
Yeah, love this question. So, whenever a business owner may be interviewing a new fractional CFO, first things first is you kind of ask, what questions should they ask? I would want to know, what questions are the fractional CFO asking? Um, are the questions they asking, do they sound more focused on what has happened or more focused on where do you want the business to go? We can't change what has happened. We can take it and learn from it, but we really want to focus on what were the goals for the business owner. A lot of times, if the candidate that you're interviewing to become a fractional CFO, if they're really focused on bookkeeping, I would consider that to be a red flag, where we're really digging down into the details of different transactions. Yes, that's important, but that's not the role of a fractional CFO. Or are they really only focused on tax savings? Again, that may be more of a tax strategist or CPA and less of a fractional CFO, because tax strategy is very important. However, again, we've got this overarching theme of where we want a goal of where we want the business to go, and that's how we want to make decisions. So if I'm too focused on taxes, you may not make the decisions that you need to make. And like you mentioned too, if they're not really discussing strategy with you, another kind of a red flag. Hey, I think this might just be more of like a high level bookkeeper, less of a forward looking fractional CFO person. So easy questions you can ask. Hey, how do you forecast cash? How do you typically help clients make decisions? Are there KPIs that you like to track for me in my business, or do you have a dashboard that you like to share? Some of those more strategic questions will draw out the answers to let you know whether or not this person is just a glorified bookkeeper, or do they really have what it takes to be a fractional CFO.
So, for the business owner listening who is wondering, do they really need that fractional CFO yet? What questions should they ask themselves to determine whether now is the right time, or maybe they should focus on strengthening their financial foundation first?
First question is, am I getting my books closed every month by my bookkeeper or somebody on my team that's doing that? Am I getting that across my desk? Am I getting a set of financial statements that I'm reviewing? We already want a client that's going to be looking to hire a fractional CFO to be in tune with their books somehow. So big question there. Second question is, how complex is my business? Is it as simple as, I've got 5 clients, they all pay me $10,000 a month, and then I pay my 2 contractors every month? So pretty simple. Then that might not need a fractional CFO. They can help you get to their goals, but it might not be necessary until you start to run into, now I've got maybe excess cash and I need someone to help me understand what to do with it. Or how big is my business? And maybe it is complex. Do I have inventory? Do I have a lot of different employees and contractors and receivables and payables? And I know how to run a business, but I get a little bit confused when I'm looking at inventory reports or aging reports, and I really need someone to interpret that for me. These are some of the questions that a business owner might ask themselves. And if you find yourselves answering yes, or some answers that lend towards I could use some extra help, then that might be a really good trigger to reach out and at least talk to someone about it.
That's good stuff. Brett, thank you so much for your time, brother.
Yeah, thanks, Evan. I appreciate it.
That's it for today's episode of the Luca Ledger with my man, Brett Arnold. If you'd like to learn more about strategic tax planning, fractional CFO services, or building a stronger financial foundation for your business, visit luca-fs.com. Thank you so much for listening. Don't forget to subscribe, leave a review, and share the show with another business owner who could benefit from the conversation. And we'll see you all next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.